The US dollar is extending its advance across the board. Investors are going long on the US dollar for several reasons, not only macroeconomic ones. They will be able to assess the US economic conditions and outlook for the US economy today, absorbing preliminary PMIs. Besides, data on the US GDP growth for the second quarter will be released later this week. But political news also has a significant impact on the market sentiment. The US Democratic Party has made a prompt decision on its candidate for the presidential race. So, US mass media claims that Kamala Harris could be nominated in the nearest days. That's a month before the party convention. And this shift decision will moderate the risks of a political uncertainty. For this reason, the US dollar is picking up steam. Therefore, if the rumors are confirmed in the next couple of days, the US dollar will receive fresh impetus to maintain bullish momentum. Its index, which measures the greenback strength relative to 6 rival currencies, climbed to 204.50, the highest level in the last 2 weeks. Today, investors will get to know preliminary PMIs both for the EU and the US. European countries have already reported extremely disappointing data. In Germany, the powerhouse of the European economy, the manufacturing PMI not only fell short of the estimated 44 points, but also went down again to minus 42.6 points. The index signals a decline in the domestic overall production as a result of shrinking output rates and a contraction in new orders. Germany's manufacturing sector is still limping and recovery is expected, at best, only by the fall. Now let's discuss the technical chart for the euro-dollar pair. The instrument is accelerating its down move, having left a sideways channel. The currency pair is going through a downward correction from the psychological level of 1.0950. If the price gains bearish momentum, the instrument may slide to 1.08 or below. However, the signs that the euro is overbought in smaller time frames may complicate the bearish move. Other news from the United States should also shape traders' sentiment for oil transactions. Crude oil inventories in the US dropped by another 3.9 million barrels last week, according to the American Petroleum Institute. To sum up, they have been declining for the fourth week in a row. Meanwhile, oil prices are trading lower. Of course, traders may attribute this to some kind of inertia, but after the reduction in the US oil inventories, it's the wrong reason. So, most likely the current decline is clearly speculative in nature, which can lead to a sudden jump in the oil prices. The Brent price is likely to rebound later today, especially if the US Department of Energy also reports a further decline in the domestic oil inventories. The oil price has approached the psychological level of $80 a barrel, the oversold level. Technical analysis may indicate a possible pullback, and there is another factor providing some support for oil prices. The risk of short-term supply disruptions popped up in Canada, where wildfires continue to threaten the region that accounts for more than 10% of the country's oil production. The Russian ruble is trading flat. However, unlike the rest of the market, in the dollar-ruble pair, there are no even minor signs of the greenback's growth. On the contrary, the instrument is developing a confident movement entirely in favor of the Russian currency, almost 86 rubles per dollar. And this completely fits into the logic of the tax period. Most likely, this trend will continue at least until the end of this week, and the ruble will gradually assert its strength. That's all for today. We continue to follow developments in financial markets. Subscribe to our channel and follow news with us. And see you soon!